Good day, everyone. It's Dr. K and Gil Morales on this shortened holiday weekend trading day. We've got the averages that continue their uptrends in baby step formation. Nothing new there. At NASDAQ's hitting new highs. S&P also closed at the new highs just this week. And we've got, meanwhile, a number of leading names that are healing their wounds, like LinkedIn and Facebook. Both of those are trading under their 50-day moving averages. Got Tesla, which has really gotten whacked, closer to its 200-day moving average. And then there's a number of biotechs. Some of them are seemingly doing okay, and some of them are like VRX right at its 50-day. It just seems to want to hug the 50-day. See if it can gain some traction there. And then we've got ILMN that had a gap up on an earnings report, and that seems to be working out fairly well, at least holding its ground. But you could argue that with the major averages moving higher, you'd expect to see stronger action in a leading name, since the definition of a strong leading stock is that it's going to well outperform the major averages. On the other hand, you've got QE pushing these averages higher in an artificial manner, so there's almost a bit of a decoupling between the action of leading stocks and the persistently higher moving averages. And as far as take a look at commodities, hard assets, with all the QE printing going on, you'd expect them to awaken, but the Commodities Research Bureau, CRB index, seems to be testing its lows and not getting much life there. And you got precious metals that are also testing their lows. It seems like these commodities are asleep, or in the midst of maybe the continuation of their downtrend, which is a bit of a mystery in terms of all the money printing going on, and which should favor hard assets in the long run. But as you can see for yourself, these commodities have not really come to life at all this year. And this year has been the year of full-bore money printing on the part of all the major central banks. Anyway, Gil, did you want to comment on that?
Yeah, I think the action is kind of interesting. First of all, I'm a little slow today because I don't know if it's possible, but is it possible to get a food hangover? I think I have a food hangover today after stuffing my fat face yesterday, and I hope everybody had a nice Thanksgiving yesterday. Didn't eat too much, at least those of you who are U.S.-based VOSI members. But in any case, my brain's, all my blood's in my stomach right now, so cope with me or bear with me, or both, I suppose. But the interesting thing here is you got the indexes moving higher. Of course, the Nasdaq gaps up in a little narrow range here. The action to me is a little bit suspicious because it seems to be driven by movement in big Nasdaq stocks like Amazon just going bonkers, and the volume is very light as it moves higher. And you have Google, which recently broke out of a little flag. It was moving sideways after this Bible gap, and it has managed to move higher. And of course, Apple's also come on to break out. You had a pocket pivot move 3 days ago on Tuesday, managing to break out of this range. And it strikes me as a little bit, with these big names moving, and you got Microsoft also moving. I think Priceline continues to move. It's a little like they're piling into the market, but they're not coming after the smaller names. And you're seeing most other stocks have gotten whacked. Netflix is continuing to act well. It's the only one of the so-called four horsemen to continue higher, but there's no buy signal here. There's no pocket pivot coming off the 10-day moving average, but it's drifting higher, which I think is very interesting. Well, the rest of them, LinkedIn, of course, hanging along. It's underneath the 50-day moving average, trying to hang on somewhere along the 10-day. It looks to me like you're going to get a weak rally and that's going to roll back over. That's what it looks like to me when I look at it on the weekly chart. I think it can probably go lower from here, but it's a little bit touch and go. We'll see what happens. It kind of depends, I think, on what goes on going into the end of the year. Do we get the proverbial Santa Claus rally, or do we get some sort of tepid, bizarre action? But it is weird that when you have the European Union is talking about lowering rates to going to negative deposit rates, and the Fed confirming that they're pretty well stuck in QE, and I think most people would agree that they're kind of stuck between a rock and a hard place. So it's not like they can, how do they exit QE, and how do they do it in an orderly manner? It almost seems like the markets are beholden to it, and they got the IV, the morphine drip going, and there's just no way to pull back. In the meantime, I think stocks, it's pretty. The leadership seems kind of narrow. I know the S&P 500 or NYSE advanced decline line has gone flat as the index has moved higher. You notice the movement in the S&P is a little bit shallower, but we know why the Nasdaq is stronger, because you have these big Nasdaq names moving up. So it's really difficult in terms of looking at things you want to buy and wondering whether the action underneath the hood of the market isn't telling you something in terms of some weakness that might appear in the next week or so as we move into December. But I think today you've got light volume. It's short day. They're going to push the market down end of the month. I think you might not see necessarily a drift higher like this if it wasn't end of the month, but where you're not going to find many sellers in the way here probably, and so they're pushing a lot of stuff up. I notice even Tesla is bouncing off of the lows here. But as it rallies, I think you run into resistance in here in the 130 area, and that's just kind of a dead cat bounce so far. Facebook is trying to rally after coming down through its 65-day exponential, but it's violated the 50-day a while ago, and you're getting a 3-day wedging rally. And I guess you can get excited about that, but it doesn't look to me like the stock's formed the bottom yet. Is it an orderly sell-off? I suppose after this big move up, it is to some extent, but the stock has continued to move lower, and there are no real signs of buy points anywhere around here. So it's a little bit of a mixed bag there. Yelp got bashed, and it's below its 65-day exponential moving average. We saw Qihoo get bashed last week after earnings on heavy volume here, and you're just kind of hovering around underneath the 50-day moving average. Notice how it regularly violates the 50-day moving average, but it seems to hold without violating the 65-day exponential moving average, which is interesting. Some other names, the Silica Holdings trying to sit in a base here. Not too bad. After another secondary, which knocked the stock down, I think, a couple, 3 weeks ago, it seems to be hanging in there. So I think this is one to keep an eye on. Looking at Taser also, it's sort of hanging in there. One of the things I don't like here is if you look at the weekly chart, see how you're wedging along the lows here on the weekly chart. So it's not really a 3 weeks tight. I know someone in the chat room last week was talking about how it looks like a 3 weeks tight formation, blah, 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 but it really wasn't. It closed up like that for these 2 weeks. So it's not really tight in here, and it's wedging along the lows. It tried to move higher this week and reversed. It seems to me this needs more time to build a base, and I don't like this formation here. So I wouldn't be surprised to see a pullback into, say, the 50-day moving average around $16. So I'd watch for that to occur if it does, and see what happens in terms of this thing trying to build a base. Notice it's pulling in today. Volume is light. Splunk was a nice viable gap up the other day, last Friday. And it's getting pushed down today. Let's see, they got it down about 60 cents right now. I think this thing is trying to move sideways. Volume's drying up. You might look for a test of the lows here. 70, 71 maybe as a spot to try and buy the stock if that's what you wanted to do. If you think it's going to move higher. A lot of viable gap ups, though, have not really turned into huge upside. GoGo was one of those exceptions that really rocketed for a few days, but it made sense to take your profits on this thing once you're up like 50% from this point here under 20, and now you're moving sideways, trying to form a flag in here, but this doesn't look like it's going to close tight this week, so a little bit of to time is probably necessary if this thing's going to go higher. Hey, Dr. K, do you really think this stock has huge potential going forward? They don't make any money. And
Yeah,
go ahead. I'm
it's
gonna
a
finish.
you know it's basically a play on whether they can dominate the market in this space. That is going to be in great demand because everyone wants to be able to use the internet on these commercial flights. And to be able to do that in all the different classes, I mean, the airlines are going to be hungry for this service because it's going to really put them ahead. I know a lot of people who are looking for, they'll take specific flights that do have that Wi-Fi. Certain Virgin airlines, for instance, have Wi-Fi, but only I think on only one of their type of aircraft. So it's just a nascent technology that is going to be huge, and eventually, who knows how long it's going to take. This stuff uh, should saturate the market pretty fast because the airlines are going to snap up this technology. And GoGo is, the question is, do they have first mover advantage? And there's a lot of other carriers that can provide this service. So I think it's a very competitive space. And the chart's telling me that they're doing very well just because of the gap ups, and the chart's in very good shape. So I always go with the chart. The fundamentals are there, and I think the chart will tell us whether this company really does have first mover advantage and can maintain its lead in this space.
Yeah, one of the things I guess keep an eye out for here is a possible surprise where they get to profitability faster than expected. They're looking for 3 cents a share in 2015. Their first profit is expected to be reported in the March quarter of 2015, so a year and a half away from that. And then in 2016, they're looking to make $1, an entire buck, and then 2017, $1.79. So I would think that the surprises could be in how quickly they get to profitability. If they're able to get there faster, I think that might set it higher. I think what the market liked the last time when they announced on the big gap up here, they liked the fact that the revenues were much higher than expected. So I think that's what drove the move back then.
Yeah, and they also claim to have a technology in this space that's proprietary. Therefore, that gives them a leading advantage. And yeah, that certainly could make a difference. But I would also argue that this space is competitive, so there's going to be other companies that come out with their own versions of this technology to service airlines.
The sellers have been something of an uneven bunch. You have SunPower just sitting here trying to build a base and moving sideways. First Solar had the big gap up move here, ran up a little bit, but seems to be filling in here. Weekly chart, might suggest it's just building a base here. Same thing with SunPower. This has been a leading group though, but notice how it's sort of corrected and it's not really doing too much in the face of the indexes moving higher. So you're not really seeing the leading group here, one of the leading groups move higher. CSIQ is building a base here, so it's only a couple of weeks down. Some support off the lows, but these might be areas where you see, if the market continues higher in December, you might start to see some breakouts in here. So I like some of the media stocks. I know they're not that exciting, but Time Warner had a gap up last Friday and it's continued higher. There's some talk of Charter Communications and Comcast coming together to jointly bid for Time Warner, and so that sent the stock higher, and it actually was playable on that basis. The only problem is this could run into some antitrust action from the government if they don't feel that this is all that kosher, and they don't want just a few large cable companies dominating the market. I do think though that the movement in these stocks like Comcast, which it's broke out on the basis of buying another company. Charter Communications, another one. It's weaker though. But I also like Discovery Communications. They had a couple of pocket pivots, one here and one here 3 days ago, and that seems to be doing okay. And these they're not really glamorous, but if you look at the numbers on these companies, there is solid 20-40% earnings growth. Discovery Channel up 25% in the most recent quarter. And sales growth, I noticed, over the last 2 quarters is up 28 and 30%. I think it's interesting. Those numbers are interesting because historically, Discovery Channel's earnings have been, or rather sales growth has been around 10% negative as well over the last several years, and so this is a little bit of a change in the pattern. Next quarter they're looking for a 49% increase in earnings, 91 cents a share, and the stock's moving higher. So it's it's not nothing really exciting, but it is trucking higher, and I think that's a lot of what you're seeing in this market. The big cap names pushing along, in the Nasdaq, Apple, Amazon, Priceline, Google, even Baidu's been getting in on the party, and then you got a little bit of help coming from what I like to call now the three caballeros. The Biogen is acting okay, holding real tight after the gap up and then a move up. Gilead Sciences is holding tight after a Bible gap up. I guess not a spectacular one, but it's holding up okay. Celgene as well. These companies last week all had positive news out of the European Union, where they are. I don't know what do you know what it was out there, Dr. K? Something about some products of theirs were being approved and given the green light by the I forget what it is, the committee for something or another. Europeans are good for having lots of committees on things, but I guess it was positive for the stocks, and so they all gapped up. I think Biogen's move though is the most powerful, and it looks to me like it could try to pull higher from here. But volume's drying up though as you're sitting in here, so maybe it's ready to pop out. It's a possibility, I suppose. Looking around here at some other names. I know Workday comes to mind. That gets questions as to whether this is a viable gap up. And one of the things to keep in mind here is these guys aren't going to make money until 2018. They're expected to make 60 cents a share. They're losing money until then. It reminds me a little bit of CRM, Salesforce.com, because that thing actually had a move the whole time they were losing money. If you look at this, it's not. Let me just kind of shrink this down. If you look at this, they were moving up off the 2009 lows, and have had a steady uptrend since then. Recently correcting after earnings, but they were never making money. Does Workday do something similar? It's hard to say, but basically what you have going on here, if you look at the weekly chart, you are coming straight up off the bottom of the base, number one, so you're finding some resistance from the left side here. The other thing is this company has a 10 million share float, and going into earnings the other day, they had 3.8 million about shares approximately short, and so I think a lot of that was probably short covering at 7.5 million shares. There's probably some natural buyers there too, but it seems to be finding resistance right at the peak, and it may need more time, assuming that it's going to work. So I think there's a little bit of a mixed bag there, and I think it may take some time. I'm just a little skeptical as you just come out and buy this Bible gap up and think it's going to work and just truck on higher, because it is coming from a position straight up off the bottom of the base. Dr. K, do you have any comments on that sort of formation when you have a Bible gap up coming off the bottom of a base like that?
Yeah, the base is relatively, if the consolidation was relatively orderly, in other words, it wasn't too steep of a downtrend or too prolonged of a downtrend, then that viable gap up, or the gap up, then becomes more viable. And I mean, in this case, it did come back up through its 50-day, and it was on an earnings announcement. And the technology is interesting, and the industry group strength is good. I mean, it's got a lot of things in its favor, so this is kind of one of those maybe cases where I'm keeping an eye on it, but I'm not just jumping all over it either. And you'll notice that it's had a tendency to violate its 50-day more than a couple times. So it seems like it's all of that taken together. It's a good stock, but the question is it really a leader? And I'm keeping an eye on it because I want to see maybe a pocket pivot buy point emerge after this gap up in the stock.
Yeah, something might occur and maybe need some, like I was saying, it might go sideways, maybe drift in towards the 50 in an orderly manner with the volume drying up, and then you see the 10-day catch up and maybe something sets up, possibly. So let's see here. Other stocks, Line comes up, I thought I'll talk about this one. It's trying to hold the low of the Bible gap up, but I already bopped through it, and there was Danaher was a holder of about 7.6 million shares, I believe, and they or maybe it was 7.4 million shares they got in a settlement, a court settlement on a patent infringement suit, and they sold here, and there was an arranged sale, and so it's whacked the stock down. Probably what it does in the short term is absorbs buying demand for the stock, and that's why it's not really going anywhere. It's flopping around. I was just kind of watching this. I wonder if it'll try and maybe retest the 50-day. If you got to figure that these guys, Danaher, they bought the stock, I think at around what would have been $9 a share essentially. So they've done real well on that block of stock that they got on that settlement, and so for them to sell some of it up here at around $55 makes sense. But in the near term, it probably absorbs some of the demand for the stock, and so on that basis, it might flop around in here. But I keep an eye on this because it's possible it may come in and just back and fill. The volume isn't, there's a lot of buying interest down here, like I said, because it's probably absorbed a lot of that with this arranged sale that occurred. So I'd give it some time and see what happens here. Selling volume is started to decline here. You had a couple of big days in here, and I think a lot of people get spooked by that because Danaher owns another 3.8 million, I think it is, something like that, shares, and they could come in and knock it down again. I guess that scares everybody, and that's why nobody's really interested in the stock right now. But it does get a lot of questions. But that's basically what it's doing on the weekly chart, holding the 10-week line. So far after this big gap up, so it might be in a viable position if you're feeling brave. So looking at some of the oil names, I know Bonanza Creek Energy, that totally broke down. But meanwhile, you got Silica is trying to hold up in a base and see what happens there. There was this Carrizo Oil was trying to hang in there, and it's sort of hanging out and building a base. But most of these names, along with the commodities, have come off, and there isn't. Oils are always pretty erratic. They have nice moves up, and then they correct, and some of the corrections can be doozies at times. I know we've seen some get clobbered, but that's not really an area that seems to be providing any viable strength. And so there aren't a lot. I mean, there isn't a lot of stuff out there, at least from what I see, that it looks like it's just in a wildly viable position, and I want to be all over it because it's going to have a big move. It seems like it's mostly these big cap names. I think even IBM, is bouncing today, and that's helping to push the Dow. You had Hewlett Packard on Friday jacking to help push the Dow as well. So you have some of these isolated old big cap names. Maybe it's this case of the dogs barking in here, and that might be cautionary. But that's what you're seeing, and it's able to push the indexes higher. The S&P is a little shallower, but NASDAQ a little bit steeper because of the big names, and we'll see what happens next week. We have the jobs number on Friday. So let's see if we got some questions here. We do. Believe it or not, there's a few of you here, actually. Yeah, the usual number of people. That's good. Most of you then aren't too hungover from yesterday, or have a food hangover, as I do. Generac is, what about it? Let's see. It's trying to break out. I guess that this would be considered a breakout, but I prefer, if you're going to buy this thing, you had pocket pivot, I believe, here. So that would have been a better place to buy it rather than buying it up here. Somebody asked, Dr. K, any ETF suggestions to play the Santa Claus rally into year-end, which I guess that assumes there's going to be a Santa Claus rally, but I'm not sure there's any specific ETF that would be considered all that much better of a vehicle, assuming there wasn't any other vehicle. Dr. K, what's your take?
Yeah, I mean, if you're gonna, let's just say hypothetically we do get a continuation of the uptrend into the end of the year, then you want to play the indices that have the highest risk, because you're betting that the reward is going to be commensurate. So the averages with the highest risk would be things like the Russell 2000 and all its related ETFs. TNA, for instance, that will probably give you the biggest bang for your buck should the uptrend continue. S&P 500 would probably be on the other end of the spectrum at a lower level of risk and therefore lower reward. And the midpoint would probably be something like the NASDAQ 100, NASDAQ Composite.
Yeah, but I wouldn't assume that there's going to be a Santa Claus rally. You really don't know. The action underlying the market is a little bit funky, so I don't know whether that's cautionary or not. That's the way I'm looking at it, and it has been possible to make some decent money on isolated cases like on the short side. Trulia was one name that broke down from a Head and Shoulders, had one good move to the downside around the 200-day. Cover, take your profit. You get a bounce up into the neckline short again, and it undercuts the low here, and you can cover and take your profit. And those are actually quite playable. I've even been successful hitting Yelp on this sort of move, and you get a nice breakdown there, and that's actually a pretty decent breakdown of over 10-15% just about, and that's a pretty decent move to play. And I know some commentators say that shorts are getting killed, and that's not true at all, because you can actually rotate around, and I'll go long and short in this market and play some of these moves, and you get a nice break like this on a Yelp on that day, and you're short 2,000 shares. That's pretty nice, but it does bounce right back up into the 65-day exponential, where it becomes shortable again, in my view, unless using that as your stop. And if you look at this, it's sort of a rolling top, a little bit Head and Shoulders-y, like, I guess you might call it. But not a really strong pattern. A lot of selling volume in here, boom, boom. And they're getting a lot of these social media names. Groupon has really come apart. I thought this thing might try to turn around, but it couldn't hold the 10-day line. So once it can't, that thing's out the window. Twitter, everybody asks about Twitter. That's what it looks like right now. Just a big, ugly, volatile, whatever. I don't know. Would you call that a flag formation? Dr. K, looks kind of cheesy, but
Yeah,
I'm not going to buy this thing, in this position. So market coming in a little bit. My expectation would be to hold it up most day. Then you'll see some lightening up into the close, maybe, but they'll probably hold it up. But it's to me, it's a somewhat confused market. Despite the indexes moving up, everybody's getting complacent. You have the investors' intelligence, bullish to bearish percentages. There's like very few bears now. Everybody's a bull. And I would be cautious here, because I think unless you're buying something in a real nice position where you have a very well-defined stop and it's not too far away, I think trying to come into new names here is very difficult and risky. So anyways, let's see. Here's one for you, Dr. K. With the short trading period today, will there be any pocket pivots called based on what the stock may have done on a normal trading day, like last year's follow-through day call by one on 11/23? My short answer to that is probably not. Your answer, Dr. K?
Yeah, I'm not actually what they want to see if they're expecting
Well,
to
are you
see
going to
what
call
now?
any pocket pivot? Would you call a pocket pivot today based on what the stock would have done on a full trading day? Well, you have to assume that's
Oh,
what
I
it would
see.
have
Yeah, yeah. You could try to extrapolate the volume out.
But I don't think
I
that's
would
really that
add.
meaningful on a day like today. I think it's kind
Yeah,
of silly.
there's a lot of retail volume, and it's a lot of bias to the upside generally on days like today. Statistically, on barring any negative news, you got a lot of retailers and they're in good moods, and it's they're sitting fat and happy after Thanksgiving, and that tends to push the market higher on a day like today. So I think that's a bit of a misread in terms of the price volume action. So I wouldn't take today's trading action as anything that important. What's more important is the action leading up to today. So, for instance, if you saw a stock and you loved it, it's great fundamentals, and it had a lot of trading volume today, you might take a position on that basis. But don't just isolate today's action as all that important.
Yeah, I have to say Ross Stores is not one of those fat and happy retailers. Stock in a nice uptrend and boom, it gets slammed. I noticed Lowe's also got gapped down on earnings. Best Buy, another one gapping down on earnings. And it almost looks like you might get a shortable flag in here where you might see it break down for these lows down at 38 again. And that's kind of almost looking shortable to me. Both of these actually look pretty garbagey. So that's how I'm looking at it. On some of these retailers, I don't see that much strength in retail, which is interesting. Here's Lulu back at the 200-day moving average. Maybe that's a short there. Another one I noticed was GameStop. which completely broke apart here and setting up a little flag. It's probably primed to bounce here, but that's come down. I've been shorting this thing for the last few days, and that's been successful. So the idea that shorts are getting killed in this market is a bunch of BS. What it really is all about is shifting around and seeing where the trades are long or short without really having a bullish or a bearish bias. And I find this this strategy is working very well for me right now. I'm near my highs for the year performance-wise, and meanwhile I can be short, and these indexes are still moving higher, and there's no real follow-through in terms of a lot of leading stocks unless you're going to be piling into Amazon and Google and Apple, which looks like that's what institutions are doing, and I'm wondering why they're piling into the lower risk names. And I'm not sure what's driving the Russell 2000, because you don't see a lot of small cap names. Financials have been trying to do better. We've looked at names like Morgan Stanley, which is hanging in there. Schwab is hanging in there, but nothing really spectacular when you look at the action. It's just they're just kind of trucking along and holding up. So comment on DDD. There's nothing really here to comment on. It did pull down to the 20-day exponential moving average. That's the green line. You get a little bounce, a little dead cat type bounce here. It probably needs to base. Dead cat bounce on Tesla, but possible pocket pivot volume. I'm not. I mean, if you're trying to call a pocket pivot today and extrapolate if the volume is going to be higher than this day, so I don't think you're going to get there. No matter how you want to slice and dice it and try to manipulate it around based on the short trading down, and that's not. This isn't a pocket pivot buy point. I mean, this isn't a downtrend, a very clear downtrend. You haven't really seen it round out for very long. If you're calling this, a few days moving sideways along the 120 level as some sort of constructive setup, to me it looks more like a bear flag right now. And I think if you're looking for a pocket pivot here, that's quite a stretch, and I don't even think you're anywhere near a pocket pivot buy point on that basis. So ISIS, here's a biotech stock with no earnings. So you're coming off a double bottom here where the second low is higher than the first low, so maybe that's a little bit faulty. It's coming up here, but this is a pocket pivot. I guess you could have bought it if you wanted to, and you'd be up a little bit from there. Not too bad actually as a trade. So in this market, you see something giving you a short-term buy point. I'll jump on it and ride it for a couple days if I like it. I don't know enough about this company, but that's really what's going on here. You had a pocket pivot here for 4 or 5 days ago, 5 days ago rather. And you're just kind of hanging out, some resistance at the peak here, so maybe it just goes back and forth. But I can tell you that this is some hot name that's going to 100. Las Vegas Sands is just popping back and forth, in a base. Nothing terribly exciting here. That's what it looks like on a weekly chart. It's pretty constructive. It's a nice flat base, so you'd be looking for some sort of buy point, but it isn't there yet. Fleetmatics, this is a roundabout pattern. Pocket pivot in here. After this sort of pocket pivot gap up. Now this is trying to round out, and I don't know if you want to call this. I don't know what you call this. Maybe a double D bottom here. But it's just kind of hanging along the 10-day moving average. Finds support at the 20-day. No real selling interest here as it kind of rolls around. And that's basically it's still rounding out. My view here is that it should continue to hold. I would use a 20-day exponential myself if I'm long this stock on the basis of this pocket pivot and then the pullback. So, and you're within about $1 or so of the 10-day moving average. It's at least from the 20-day here. So it may need to go sideways here. We'll see how this pans out. But I wouldn't, I wouldn't say that there's a lot of stocks to come after really aggressively, because I just don't see it really happening overall. A lot of leaders have gotten smacked. The four horsemen are getting smacked. Netflix is the holdout, so of course Netflix is has gone from being one of the four horsemen to the Lone Ranger. You got a little range here. It's kind of churning light volume. I don't know. We'll see. Maybe this pulls back to the 10-day, but I don't really see any opportunities to catch any strong trends here. And you can get excited about Google moving up, but from 1041 to 1064, what is that? 2%? That's really nothing to get terribly excited about. I think Amazon is a little better, but see, Amazon, you had to buy it when it looked ugly here, right off the 20-day exponential, and then after that, it just kind of trucks on higher, and you're wedging higher. So it looks to me like end of the month sort of pushing them. This week, a light volume week. So for the last 4 days, we've been pushing higher on these stocks, and even Apple, the dog, is getting buying interest, and people are moving into that. So I guess that's being seen as a value sort of play. Dr. K, any recommendation on hedge trades to protect against market selling off into year end?
Well, cash is usually the best.
Yeah, go to cash. You could go to cash, take your profits, right?
I don't like to really hedge with
XYZ and short ZYX. That's it. Yeah.
Yeah. Some people do puts and calls. They hedge. I don't like to get complicated. I like to keep it really simple. So I generally just go right to cash, and then my capital's ready to be deployed at the next opportunity. Just keeps it very simple. I mean, you can get tricky and cute with, buying something that's, say, inversely correlated to what you're holding, or has somewhat of a negative correlation to what's in your account. And again, people use options often to do that, just to offset. And you can. I mean, there's nothing wrong with it. It's just not my style.
No, I don't think it's either of our styles. I mean, my view is if you're hedging, then you're basically saying I don't really know where this is going, or if you have some huge profit you need to hedge against, why not just take the profit? I don't really understand why what the necessity of hedging is, unless you're trying to mute your upside if things move in your direction. My view is take things on a stock by stock basis. Maybe you could have some shorts, and I've been shorting some stocks and making some money. And at the same time being long some stocks and making some money. And so, in a sense, if the market got into trouble, my shorts might start to outperform in a big way. And as long as we sort of remain in this mushy uptrend on an individual stock basis, then I look at it as being playable both ways. And in that sense, I guess that provides sort of an intrinsic hedge, but I don't intend it that way. But it seems to be... just taking stocks on an individual basis seems to be working, and not really having a bias long or short. And like I said, I don't see where you find trending stuff here. So I think OCN, this is now back up to here. So, and this is kind of typical. Stock breaks down real hard, and then you just kind of drift higher. We saw Lulu do that. I'm just kind of watching this and seeing if it breaks down. The group remains pretty weak, so my guess is you're going to see it roll over again, not unlike the way Lulu, after this gap down move, remember it just drifted to almost looking like it's breaking out here. Well, it did break out from this range here, and then it died at that point. So that might be what OCN looks like. But just watching it, if I try and short a little and it just pushes higher, just stop myself out real quick. And just watching it and waiting to see what happens. You're getting close to an area where you should start to find some resistance, but I notice, the light volume, it's just kind of drifting higher. My guess is you'll see sellers come into it eventually here. So I don't think it's really ripe yet. What is your daily routine to look for viable gap up and pocket pivots? Well, I just kind of run screens and look at my buy list. That's really it.
Yeah, pretty much.
No, nothing. Nothing special. I do some chanting, and I light incense. And then I do the hokey pokey, and that's part of my daily routine. What are your guidelines for shorting stocks? I don't know what you mean by that. I think if you're looking, I'm not going to go into a whole rigmarole on shorting because I'm not going to read basically chapter 6 of our first book, which came out, or even the book that I wrote with Bill O'Neill, how to make money selling stocks short, that came out in 2004, to which I'm starting to write a sequel to that, or sort of a follow-up. But that's what I would look at, So I'm not going to get into some long discussion of what are the guidelines for shorting stocks, other than that you're just looking for patterns in former leaders. The essence of shorting for us is you're looking for breakdowns in former leading stocks, and that's where you'll go after them. And then there are various patterns, and you can find all of that in our books, and I would suggest going there for that. So, because this isn't really in the forum to go into that right now. Ligand Pharmaceuticals, what about it? I don't know. Is this another one losing money, Dr. K?
Let's see. Most of these are, so yeah, I mean, based on the price action, they've actually been positive for a number of years. And looks like they have huge estimates going forward. The sales looks like the sales are accelerating in this one. It's interesting. It's a bit sloppy on the chart pattern, and but it's
quite sloppy.
Interesting in terms of the potential, the earnings potential here.
Yeah, if you buy it, I guess you got to be willing to sit through this kind of stuff. See, on the weekly chart, you go boom, boom, you run up, you break out here, and then boom, you come right back in. This might even stop you out. Let's see. Yeah, if the breakout point here, say, was $50, and you drop here to 45.25, that could easily stop you out of the position. So it's volatile, I don't know if you like this kind of stuff, go for it. No,
yeah, the volatility is the biggest problem.
Yeah, I think if I was going to buy a biotech, just buy a Biogen, I guess. If it's going to, assuming it's going to go higher. So. Let's see. I already talked about Discovery, DSCA, Alexion. Alexion doesn't look too bad. You got to buy it when it's down, though. Down here you could have bought it off the 50-day, and then you pull back down to the 10-day here. Now it's running up. I don't think I'd buy it up here, but it's acting okay. But the group in general is acting okay. And you have several tight closes along the P here. You have 1 week closed down like that, but the rest are closing somewhere close to the 125 area, or I'm sorry, closer to the 123, 125 rather. And so you're hanging in there pretty decently. It looks okay. AOL looks to be setting up. Yeah, AOL's been erratic though. Just formed a flag. You try to come out in here, you failed. Now here you go again. So earnings growth is picking up 72% in the most recent quarter, but 6% sales growth. I don't know. This might be similar to stocks that you've seen in the cable group. Just it's internet content. I don't really know whether I'm interested in buying the stock. But is it setting up? It's moving sideways, so you would look for a pocket pivot somewhere, perhaps coming up to the 10-day moving average if you're interested in the stock. If portfolio managers are truly in a chase for performance into year-end, Dr. K, and are helping to push up the market, wouldn't they have to be in their positions by now, or would they continue to buy into December?
Well, it depends on the strategy that they're employing, and a lot of portfolio managers are going to be in the institutional names because they don't want to miss out on the upside performance, and that could explain why you get this piling in effect. Well, like in Apple, people maybe some of the PMs are worried that they're going to miss out on that on this potential uptrend in Apple. Google. These are all institutional names. So I can see portfolio managers getting on board because Google's been showing signs of life.
Someone asked, can you share your top 10 to 20 stocks that are on your buy list at pullbacks? I don't really operate that way. I don't have a list of 10 to 20 top stocks I'm going to buy on a pullback. I have a list of maybe 130 stocks that I'm watching, and if one should pull back constructively to some area, I might consider buying it depending on the context of the market and the way the stock is pulling back and the prior buy points and where it is in its chart pattern. I don't maintain a list of top whatever stocks that I'm going to buy mindlessly on a pullback. There's so many contextual factors, and not only that, I'm not so lame that I can only watch 10 to 20 stocks. I can watch 100 or more and keep pretty close tabs on them, setting alerts on them, and understanding where their positions of support and resistance might be, in terms of pullbacks or run-ups. And so I don't really operate on that basis. Sorry, but see, everybody always wants something that's finite. Give me your 10 best stocks to buy on a pullback, and of course, if they pull back, then you just kind of like close your eyes and you buy them, right? Wrong. I don't think you want to be doing that. I think you want to be a little more fluid and reacting to what you're seeing in real time. In my view, if you see a stock that's been going sideways in the market and it shows a pocket pivot or something constructive, then you would buy it on that basis. But just because you think you have a favorite stock that you're going to buy on a pullback, I don't really think that's the basis for buying a stock, and I don't even think it's a basis for having a list of 10 favorites. I don't think that really applies to at least not to my trading. How about you, Dr. K?
Yeah, it's very dynamic. So the list is subject to change without notice. It's going to change, and it can change very quickly depending on the type of market we're in. So there's no such thing as my top 5, because that top 5 is going to change day to day sometimes. It really all depends.
Yeah. So Arrowhead Research, I don't know, cheap stock. Trades, it's an $8 stock trading 576,000 shares a day. That's like 4.5 million, and losing money for now until forever, I guess. So I think it's not anything I would buy. But if you like the technical action, I guess you can go for it on that basis. But make sure you got your stop in mind. Who knows? Maybe it's another Organovo that's going to have a huge run up and then come all the way back down. So if you fall in love with it and sit there too long, then you're just another sucker. But who knows? I don't know much about this Arrowhead Research to really comment on the fundamental side or what sort of hype it might start to move on. But my feeling is, anything like that has got its risk, and I think Organovo points that out. And probably, I think it's the only stock, Dr. K, that we've ever put out a sell report on. That was a new one. And the stock, that was on this day, and that turned out to be, if you wanted to sit around and see what happens, you had another day to sell it, and then if you weren't out of there by then, kiss it off. And
yeah, it had the fingerprint signs of topping action. And it was nice to see, because we don't get too many gifts in these markets, these QE-driven markets. But that was pretty. We were getting a lot of emails around there, people wondering what to do, and I guess that helped. I suppose. I hope it did. But it does show you that in this market, that's what you get. Sharp moves, and then boom, they smash them very quickly, and I think that's what makes the long side of this market treacherous, and it's why I'm not so sure that there's anything really that you have to own right here. I guess if you're long ETFs and you can sit and hope that the market doesn't have a couple days of really bad downside action, and we'll see next week what happens there, then I guess you could sit with that. Someone says the sell reports are nice. Others say your sell warning on ONVO helped me. Thanks. Well, that's good, because sometimes we get shaken out of something and it just goes higher. So in this case, it's the only time we put out a sell, and it worked out pretty well. Somebody that's in sell or buy STLD and HUN. I don't know. It's this stock. It's not even one that I'm following. It's got 1 quarter of positive earnings growth. Next quarter is negative 3%. I don't understand why you would buy it, frankly. And if you owned it, I guess you would be using the 50-day moving average. So, but I don't really have some hard and fast recommendation as to whether you should sell it or buy it. How about if you just don't even do anything with it and blow it off? HUN's another one. Huntsman Corp, negative earnings growth,
4% sales growth. I mean, the last 4 quarters, these guys have had negative earnings growth. Next quarter is supposed to get it going to the upside. It's a chemical stock. I don't think the group has been all that strong. I know like Lyondell, Basil's in the group, and it's kind of trying to base along, but this is kind of I don't, like, this is probably another one I just wouldn't do anything with. I don't know, buy or sell. If I owned it, I guess you'd be using the 50-day moving average as your selling guide, but I'm not sure I want to be buying it. There's sort of a pocket pivot coming off of V shape here, but that's about it. So, anyways, no more questions. Anything else exciting here? Kind of a blah day, kind of a blah week, but the market, trekking higher. Just steadily pumping higher, but having a couple of weird days, like Tuesday, I guess you saw the S&P was up on the day, and then it was that Tuesday, yeah, it closed down, so you had a couple of churning days in here, and now it's kind of sticking its head a little bit to the upside, so who knows what's going to happen here. But I think you're susceptible to possibly a pullback next week, and you have the jobs number coming out on Friday. The Obamacare thing is really a mess. Reminds me of the old phrase "foobar," which I won't go out and tell you what those letters all mean, but you can figure it out for those of you who probably know what it means. Somebody's asking about ARM-H. ARM Holdings is interesting. It had a breakdown here on a gap up, or not a gap up, but a breakout failure rather. So you see the cup with handle here, and it breaks out and it fails. And usually these things will have one nice move down towards the 200-day. So it comes down. I was shorting this a little bit, but once it got down here, that was it. And now you got to kind of let it do its thing, which it's doing now. It's bopping around and just kind of bouncing around. Nothing really too exciting in terms of volume. No pocket pivots, no buy points that are showing up in here. It's just kind of moving back up in its pattern. So not one I would buy, and the short was a quick one on the downside, from around 48 down to the 44 level roughly, and you could make some money that way on a quick breakout failure type of move. But again, it's drifting higher with the market, and the semiconductor group has been strong. We've seen MU has struck higher just barely. Here's a pocket pivot here. I think it even had a pocket pivot right there. Microchip Technology is another one I'm keeping my eye on. It's just kind of trending higher slowly, but nothing spectacular. SanDisk trying to come out. Intel, though, is a little bit doggy here. So, but the group in general has been trying to act better, but it's not nothing real spectacular, and it's not like you're going to make this huge money long some of these stocks. But the other one I like, the one that I think is probably the better one, is NXPI. You had a pocket pivot 3 days ago here. It's hanging out. You get a little bit of resistance from the left side of the pattern, and it's acting okay. I think I like that better. Edu. Some of the education stocks have been acting well. You got to keep in mind this is a Chinese stock. It trades relatively thin, 1,000,001. But it's a little funky, holding in pretty tight. So I guess you'd be watching for a pocket pivot off the 10-day moving average if you own it. INVN is pretty much over with as far as I'm concerned. Stock broke down here. It's probably a sell, definitely, when it broke down through this level, around 19. Gap down here, and now it's just kind of trying to drift higher. I don't really like it. It might actually be a look at this on a weekly, so the left shoulder, a big head. This might turn into a right shoulder, and it might actually turn out to be a short. So I'm kind of watching this, but that's not looking at it right now. I certainly wouldn't be buying it. So SPLK, are you concerned about the lack of follow-through? Well, the longer it takes, the worse it is. And I would say I'm a little disappointed that you haven't taken off. So it may be one of these viable gap ups that ends up failing, not going anywhere. That's a possibility. I don't know about being concerned. If you bought the gap up, you still own it, then that's your stop. 69, basically 69. Oh, well, 69 roughly right there. They got 69.0064 here on my e-signal chart. You can see that up there on that left side on that readout. And so that would be your stop. But you're kind of pulling in 4 days afterwards. So your volume is drying up, obviously, today. But maybe it's going to set up and turn out and go higher. But it is a slow week, and it doesn't seem like they're going after necessarily growth names per se. But a lot of other stuff, and the big cap NASDAQ names, which is helping to drive the indexes higher. So, thoughts on ABG? We're going to wrap up here in a second. ABG is a dog, so it looks to me like if you sat there too long, once it broke down here, you should have been out probably on this stage just under 22. Now the thing just continued lower with 2 gaps. I don't know if it's going lower from here, but because it's pretty well extended, maybe it's going to have a reaction bounce. But it's a piece of garbage. And I would hope it would be, if you own it, you'd be smart enough to sell it and not still be sitting in it. So it might, it may go further to the downside, but to me, it's kind of extended to the downside, and it's susceptible to a reaction rally. So Xerox. Not a stock I would buy. I mean, look at this big break, and then, of course, it turns around and goes back up to highs. So it's not anything I would mess with. It's old, boring old company, and a little bit irrelevant as far as I'm concerned. Anyways, I think that's all we have. You can see it's just kind of a blah situation in terms of a lot of individual stocks on the upside. The indexes keep trekking higher. The big cap NASDAQ names act well. The big cap biotech names seem to act well. There's a smattering of other stocks that seem to act okay, but nothing really getting going. And I think it's a matter of seeing what happens as we go into December and whether we do get a Santa Claus rally. But the one thing to keep in mind is there's a huge amount of complacency right now in this market as far as I'm concerned, and you can see it in the AAII numbers. Let's see here. I'm going to check on something here. Looking for my give me 1 second here. I'm going to pull something up. Investor Intelligence. Here we go. But if we look at this, here's a chart here. And this is Decision Point, and they do. Carl Swinland is nice enough to let us use these charts whenever. Just give him credit. And Decision Point is a great site for all kinds of great market data. And you'll notice here the red lines are the bears, and right now you're 55.7% bulls up here at this red line here. But these little red lines now are at 14.40%, which is really an all-time low. And this is one thing that got me a little bit concerned here. The ratio is very high of bulls to bears, and at a historical peak. And I think that's something you have to keep in mind. And when you have individual stocks, either stopping you out or there's nothing really going on in terms of buy situations, then I think you have to be cautious and not stick your neck out too far. And my feeling is I'd rather be safe than sorry, and that's sort of my approach right now, is just be a little bit quick on the trigger in terms of trading individual names, and not stick my neck out too far either way. If I got a short and it's working and I make some money, I take it and I go away, like I was showing you that Trulia example. But in any case, I think that's really the situation right now. So, anyways, with that, you guys have a nice rest of the long weekend here, and we'll see what shakes out at the beginning of December. So hang loose, and we'll talk to you next time.
So long, everyone.